The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on the 31st day of March, March the 1st, 2023, Wednesday. We're down 41 in the Dow at 32,619. There was a rally attempt. First of all, there was a lot of selling from yesterday continuing into this morning. And then there was a really nice rally, and then that rally faded. And now we're going to see, is there enough residual strength to attempt another rally? Or is this something that we've got to be wary of? We're in a sell mode in the daily Dow, but there was a chance that we could have a pretty good reflex action, maybe going into Thursday, going into Thursday, maybe even Friday. And if that occurred, that would have suggested that we've got to be a little careful about Monday. One of the things that I'm looking at here is I don't like to use one stock as a benchmark, but it is really important for me because I spoke about this last week. I said, Alta, and I mentioned this to my subscribers to my opening call, we don't have a position at all. Alta Beauty has been one of the fantastic stocks to the upside. And it just refused. Look at this monthly chart. It takes a month and then it makes a new high. It takes 2 months. It just hardly ever waits before it goes to a new high. And then it broke above the inside track repellent zone at an all-time high. But it started to look like it was fading a little bit. And I always say that the beauty products are probably the last area of anything when there's talk of recession to start to see some kind of weakness. Well, if this is the case with this little doji candle high at peak D, then it pulls back and goes to another a little longer-legged doji high on the 23rd. It has a round number open of 532, a high of 537.82, and then starts to pull back. I'm watching this closely. I wouldn't be looking at this as a short, one of the best stocks in the market as a short, but I would look at it as an option position on the put side. But what I am looking at is if the best of the best is starting to break, then the rotation that we're looking at through the different sectors says that isolation of, for instance, look at the SLX, which is the, and I should mention that we are long a steel stock. It's at 67.66, up $1.64. This is holding so well. This is a deep cyclical area. I mean, steel. So it's a rotational aspect that I'm looking at. And I could draw this in. Let me just show you how I like to use trend lines. I could draw this in like that and like that. Hit it exactly. And one like this and this. So you've got parallel lines. I could draw Chapman inside track repellent zone. But it went there today. It's holding. So this just says to me that within the context of all the different aspects that you're looking at, the selectivity of this particular move is imperative to monitor, while at the same time, the weakness of those stocks, especially those stocks that were the weakest, the stocks that were fantastic in 2021, 2022, they started to fade, and then they just collapsed at the end of 22, and then had a fabulous rally from January to the end of January, maybe beginning of February. Those are the ones that said to me, if they start to give back the gains that they've made, that's a real problem. So let me just go back to what we're looking at. And I thought today we could have a trade for subscribers with a very, very tight stop, a little bit aggressive on the Dow. I'm not sure so far it's holding okay, but that rally that we had earlier before, what was the ISM came out, that was the, let me just check, that's the U.S. manufacturing PMI. I guess it was 47.8, and it was previously 47.8, so there's really no change. That kind of weakened the market. You've got to respect that. So let me just go back to the what we're looking at here. Let me just go. I'll do this again. I'll do each one at a time. So the Dow made a lower low. So I was talking about the Chapman wave Roman candle from Friday. What is that? That's where, let me open this up a little bit so you can see it in this daily chart. That is where the price opens up. Usually it has just a tiny little wick, and then it pulls back very sharply and then closes halfway to 2/3 off the bottom. If the very next, and especially if it's red, if the very next session, or two, I always say what next session, but if it's 2 sessions, that's also the same principle. If it takes out halfway of the long-legged wick, it's probably going to test the low of the day, which is exactly what it did yesterday. It took it out. Today tried to rally, and now it's made a lower low. And this is just saying to me that within the rectangle formation, and I like to look at rectangle formations, large rectangles and narrow rectangles, we are now just underneath the low of 35,573 the week of the 23rd of December. We are trading at 52,574. 574. Well, we did take it out by a fraction. So this is a very important moment. Okay, that's the Dow. Let's go to the S&P. The S&P, SPX, there we go. The S&P hasn't made the leg D to the downside yet. The days early, it might still do that, or it might suddenly find some buying because at the beginning of March, you usually find some buyers. But we're going to be watching this very closely. Why? Because the low of 3943.08 made on the 24th, the low today so far is 3046.70. So we are very close to starting a leg D down. It's a peak D in the weekly chart, and it did do very nicely above the inside track repellent zone, which became a propellant zone. If at any point in the next week we start to trade in the 3920s, that's not good action at all. Now let's go to the QQQ, Index 100. That I have to double check here because 29256, 29255. So this is a leg C, then a trough C, and now we're going to see if we test that. The Qs are down 260 at 290.02. If they go below 290.05, go to 290.04 or lower, that starts a leg D to the downside. And you can see we've gone to a peak E in the weekly chart. Oh, wow. A lot depends on how it holds the two. I'd put it at this level, 286 to 285 in the next 4 to 5 sessions. IWM, Russell 2000. Same thing, same story. Now it's down. When I did the update just now, it was up. Now it's down 53 cents at 187.70. Not a good sign at all. And what we are looking at is that the weekly chart is still acting extremely well considering, but you've got to put into the context of the overall market. Let me just see where Alta is right now. Alta, now it's down 3.24 at 515.55. I say, only because if it takes out the left side low of the 10th of February of 512.11, there's a good chance that I have to consider it now in a daily sell signal, probably upgrade into a sell mode. I'll be back in a moment. Basil, Chapman, Tiger, Dow's down 74, S&P's down 50.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
It's an interesting vehicle, the Rivian. At first glance, it kind of looks cool, and then the more you look at it, it starts to look a little, as far as I'm concerned, starts to look a little plain. You get used to some of the aspects that are unusual, like the light that the thin light that goes all the way across. But evidently, they're terrific cars to drive, and their battery is really very powerful. Lasts a long time. All right, listen, I wanted to show you this. So this is an attempt now for the E-Mini to try to at least establish some kind of a bounce, and then we're going to see whether it goes down for another leg to the downside, or whether it can at least attempt from 39.55 to try for the 39.65 area. If it can get to 39.65, that at least shows that there are some buyers coming in. If it fails to do that, it says, uh-oh, nothing's working in this particular market in terms of buyers supporting the general market. So within that context, what I want you to show you is that within the parameters that I like to look at, AZO, oops, is it AZ? Yes, AZO, which is the AutoZone. I was looking at this years ago. We had AutoZone as a short. I didn't even realize that the earnings were coming out, but I just didn't like the action at all. And we had it as a short, and it dropped and made about $100 in a day. This move from 2,000, I mean, I don't know where they get this from, 2,454. It's down 1.2% today. It's down 31. Had a huge move down yesterday. But really what it looks like is a distribution. When you look at the, let me just go right here. Look at that. The doji candle high that was in, I think, September. And then the candle right there in, here we go. I'll tell you exactly where it is. So the high of 2610.05 the week of the 2nd of December pulls back to 2300, has a good rally, fractionally makes a higher high of 20. Oh, wait a minute. 26. Gosh, it's difficult to see those numbers. 26. I think it's an 85. I do know it made a higher high. 26.10. Excuse me. I just need to see what that price is. 26.10. 26.10.05. I better just check it. 26.05. Oh, it didn't go to a peak F. 26.05.62. Wow. I did not realize that. I could have done it from here. Of course, there it is. So let me just double check that. Ooh, 26.05.62. And this one was 26.10, right? Oh, that wasn't a peak F. That was just a double top failure pattern. Interesting. All right, so that was a peak E. Look at that. What I wanted to say, it doesn't matter, because what I wanted to say is the MACD deflected lower. The stochastic was weaker than it was at the high in December. The 9-period exponential moving average was still good and is still good in the weekly chart. It just is about to cross negative in the daily, but it hasn't done it yet. So these are always clues to me. AZO AutoZone, I look at this because I look at it as part of the whole panoply of automotive aspects. It includes the automobile sales. That means automobile secondhand. Well, obviously we don't use the word secondhand. We use used or pre-owned. Pre-owned. There we are. Pre-owned. And it says to me, this goes together with Alta. And I have to put this together and say, oh, you know what? These are just clues that maybe, and this is why I was kind of upset with myself, because the moment that the Dow flipped with a 9-period moving average crossing negative, I normally do it, but I did not do it this time. I usually flip to the short side and just let it stay there until we get a change. But I saw enough residual strength that I thought, I think that there could be good bounces, and if the next big bounce fails, then I think we could go down deeper, because we've got this arch formation, the large rectangle in the weekly chart. It only went to a peak A, and now it's starting to pull back from that peak A. It's gone to peak B in the larger context, but the most recent one was just an A, and it started to fail. So I'm watching this and I'm saying, yeah, I really don't see a kind of smash to the downside at this particular point, but I do see a whittling away, because each sector, there's one sector that's left, which is doing very nicely, which is PAVE. That is the infrastructure, but that's because a lot of money has been put to work there. PAVE, trading at 29.34. It's an ETF, up 15 cents. That's holding pretty well. It was at an all-time high just a couple of weeks ago, and it's almost close to that all-time high. So I'm just saying there's a rotation that's going on. The general weakness of the market has to be respected. But at the same time, how these other aspects and particular stocks within those sectors can help the market is really important. That's all I'm saying. So overall, being very skeptical, we are very selectively long. As I say, we've got a steel stock, which is doing very nice. We've got other stocks as well. But I am looking at this and saying, you've got to prove yourself and you've got to show yourself now, market, because I've done my best. No, you need to do your best. All right. So within that context, a couple of things I want to look at here, had questions about, and I'm going to go to, let me just see if I can get this in order. Yes. So I want you to go back here. I want you to look at gold. Gold hit the 14-period exponential moving average at 1852 today, and now it's pulled back just a little bit. It's up 9 at 1846. I think this is a process for gold, and within the context of gold itself, this is the continuous contract. I like the fact that there would be two strong sessions to the upside, even if we don't close at the high today. I like the fact that it's trying to establish some kind of a base to make this 200-period moving average, which I talk about a lot in my techniques that I use. Look how important it's been. Look how it was resistance back in November at about 1805-ish area, pulled back, and it got back, and then it went above it, couldn't hold it above it, but it kept treating this orange line as incredible support, and then it just took off and ran up to the double top, and the double top took it to the 60s? What was that in the continuous? 1975.2 in the continuous contract. Then you had a Chapman wave, rogue wave, spike to the upside, and that very bar pull back sharply, and then had a very negative bar the following session. And yeah, you are once again testing the 200 period moving average. And that just says to me that the 200 period moving average at 1637 is really important, both for support, resistance. I think it's like a sine wave going up and down around. I'll be right back. Basil Chapman, Tiger Technicians.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
I had a question about the charting that I would do if I was trading, which right now, of course, I'm not in the middle of the show. If I was charting, I'd say there's a toss-up between, you always have the positive side and the negative side. And I like to look at both. And in this particular instance, for the 1 minute chart, it's either going to form the H pattern, or it's going to go into a rectangle pattern with strong resistance at 39.55 right now, strong resistance at 39.60. If it does take out 39.60, that'll be quite positive. It doesn't sound like much, 6 points higher, but that would be a good sign because it would start to impact the stochastic, which is still very weak, and help it to rise. So that's very important. But if it takes out the 39.50 is absolutely sacrosanct right now. If it takes that out, we're going to be going quite a bit lower intraday. And this is very interesting because usually there's fund buying And you can't guarantee that as fund buying, that, fund buying means that you're always going to go up at the end of the last 2 days of the month and the beginning 2 days of the next month. It just doesn't, it's not a guarantee. It's just something that happens often enough that you can make a note of it. So let me go back to the story that I'm looking at right now. And the story is that within the different aspects that we're looking at, so in the den, Pat says, where did it go? As far as Corvettes go, GM has over a 2-year backlog. Yeah, I can believe that. And yet GM cut jobs despite pledges to the contrary. Yeah, it's a real mix. The way I'm looking at it, the GM chart is not particularly good looking. It's kind of weak. It's gone back into the inside track. What was a propellant zone for a moment is back to the repellent zone. That's a real problem. Just a statement about wow. We've got a few wells that's been going on the last couple of days. Look at this well. This is FSLR. This is First Solar Modules, photovoltaic, PV solutions, up 21 at 190.36, up 12.5%. This is fantastic at an all-time high. So yes, this is obviously a field that is really expanding very, very well. And I'm wondering about how this is does this relate at all to the batteries that are used in automobiles? Do they relate this in some way? They must do something, but I don't know if First Solar is involved in that, whether this is mostly homes, buildings, etc. But it is a spectacular move up. So yesterday, a couple of days now, we were looking at TK, which is TK Core. This is shipping. Look at this, another little doji candle, interleg D. It's probably just getting a little tired right now. Going to have a bit of a rest. A spectacular move down 2 cents today at 622. But in the last 1, 2, 3, 4, 5, 6, 7, 8. In the last 8 sessions, it's made higher highs. Unbelievable. And what was the other one that we were looking at? A NAT, which is Nordic Tanker. Also made a new high today, recovery high that is. It's up 3 cents at 446. And just a couple of days ago, it was at 360. So these tankers are really doing very well. It's just, I haven't looked at NG. NG is natural gas. I'm anticipating a little bit of a pullback. Now, when you look at it like this, I don't want to use those words, exploded and blown up for natural gas. If you look at it in the expanded view, this is very nice. But if you look at it in the weekly, I'm a little surprised that this move has just been so steady. You would think that the squeeze after all these shorts saw the move coming out of it to the upside, they would be covering like crazy. So the way I'm looking at it right now, this is not what I was discussing when I was discussing, we do not have a position in UNG, but I was discussing this for a couple of weeks now and say, the move down is so severe. And the question came in, where would you look at UNG as a real breakout to the upside? And my answer was always that I would anticipate that the bar that made the low that turned around would be a huge candle, and there would be no getting in the next day. It would just be a gap up and would follow up, and that would continue. And the low that was made, the candle of the first day turnaround, the high would not be taken out. Well, we've done that only in a very, very limited way. We had a really nice moves to the upside, very concerted moves to the upside, but there wasn't that spectacular move. And that's just saying to me, something's going on in natural gas that is so different to anything that I've seen in this context that I don't understand it. Let me just put it that way. I don't understand it for fundamental reasons, purely technical reasons. This move right for 3 days, the last 3 days, these tiny little candles should be way up in the 3.10, 3.25 area. So something is going on, but obviously this is buying, but it's not real short covering. This, I'm not sure what it is, but whatever it is, it's kind of impressive for what it's not doing. All right. So I wanted to show you that. So UNG has had a very nice move. Those people that did get in, I almost got in the very day of the low. I thought we had a miss in a particular stock. It just upset me. I didn't want to take any chance, any of that kind of risk. So I stepped away. So yes, it did go from the 7s to the 9s. This is a really nice move percentage-wise. Wow, but look what it did on the downside. This is UNG trading at 9.01, down 11 cents today. So I wanted to show you this at this particular point. The reason why I wanted to get in to our Dow position today. We're long from the low of 2020. We still got a position there. We're long from the most recent low in October. We've been trading around it, and we've had some real nice trades in the 3 times long. We've either stepped aside on the big moves down. But the only reason why I wanted to go into the Dow today with a fairly tight stop, and the stop is so far held, is because there are 3 reasons that I'm looking at the 1st of March as psychological. I think it'll be good for the market to actually, not the overall market, but at least for 1 or 2 of the sectors to move up to close quite nicely high. It doesn't mean to say it's going to happen. I'm just saying this is what I was looking at pre-market. To move high, and the Dow would be a participant on that side. And within that context, what we're looking at is psychologically, if the Dow can, it's up 8 points now, big deal. S&Ps are down 12. That is a big deal. It hasn't yet turned to the upside. But if there is a chance for the move to garner energy a little later in the day and follow through on Thursday, that's the psychological aspect I was looking at. The technical aspect is that within the context of, let me just get this right here, within the context of that Chapman wave Roman candle, when that Roman candle is pierced to the downside within two sessions, that next session, which is today's session, while it might make a low, if there is a very strong move and within 2 bars of that candle, it closes above the high that was made, that would be yesterday, which was at 32,873. I mean, that's like another 200 points higher. But if it does that, then we've established some kind of a base based on this weekly chart. I'm just relating the 2 together. The one is completely separate. One is a Chapman wave Roman candle, how you can come out of it after breaking down from it. The other is in the arch formation. We've gone to the bottom of the arch. The technicals, the 9-period moving average is still above the 14-period. That means there's still internal strength. And that means if there is a move to the upside by Monday or Tuesday of next week, if there's even a slight opportunity of getting above, this is the green, so it would be the green line right there. Let me see if I can get this. 33,353. If there's even a chance by early next week of getting above that, then we've established the rectangle.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
February's finished. Now we can look at the monthly charts. That's what I always like to do as we go into the beginning of the next month. Within that context, the Dow is still seeing the monthly chart is still looking at the 9 period over the 14, just barely, but it is. There is an arch W, a W formation in the monthly chart of the MACD. That usually portends higher prices if the histogram continues to improve, which it is, but it could also deflect lower. So this is the beginning of a month. I can only say what happened last month was a lousy candle, red candle, but it's still constantly held within that context of the 9 and 14 period moving averages as support. The MACD has improved somewhat. On-balance volume is quite good. So this is just the beginning of the month. It's just, how can we even talk in the first hour and a quarter of the trading month? Nothing to say. But I'm looking at this weekly chart. The monthly is going to mean nothing unless this weekly chart cheats that, what was the low today? 33,550. Yeah, unless that is not broken decisively on a weekly basis. So far, this is the base that you'd look at in the rectangle formation that says, all right, maybe we can make an arch formation. How high it goes is very difficult to say. This today, the reason why I did what I did for subscribers from Open Call is that it's really important in this particular down move that you have a really strong single leg A to the downside, just a modest trough to make a trough A, and then a leg B that is just very modest, and then a move to the upside. It makes it imperative, because if this breaks down and we start to trade under 32,400, that's going to impact the monthly chart. So the question came in, what are you looking at in the monthly chart? It's all very well doing the intraday and the 1 minute chart. What are you looking at for the monthly? Well, I always talk about every time frame I can. That's why I have daily, weekly, monthly, and I have short-term as well, time frames. So that just says, as of last month, not a great candle. But look at this. The S&P monthly chart, also in a very tight consolidation, and the histogram of the monthly chart is just beginning to improve. Not enough to say this is great. It's just improving. The stochastic is okay. It's up at 38%. On-balance volume is a good sign. And the pink 9-period moving average under the 14 hasn't crossed positive. So we've got all of March. This is going to be a really important month, either for breaking down or for at least having upside. Now, am I looking at all-time highs at this particular point in the next 3 months? No, what I am looking at is you've got to go step by step. And the way that the daily is the rudder of the little speedboat, the weekly is more medium-sized boat. And that takes time. And the monthly is the super tanker. It takes forever. But the fact that we've gone 1, 2, 3. This is the fourth month since the low that was made in October at 34.91. This is good action, but it's not great action at all. And that just says, no matter what you're thinking of market-wise, that monthly chart is going to be impacted in March, and it will be impacted negatively if at any point on a weekly basis there's a close below 3,800, let's call it 3,780. That'll be very negative. And if there is a push to the upside, 4,200, I don't know if we can get to 4,200 in March, but that's the number that I'd be looking at certainly by April. So that's going to be important. So what am I looking at? We're still long, as I say. We are looking at upside momentum that fluctuates. It comes and goes and comes and goes, but we are making higher highs and higher lows. That is imperative when you're looking at a buy mode. If you're looking at a sell mode, you see lower highs and lower lows. And that's the daily chart of the Qs, not too good looking. Weekly chart has improved, but still not great. And the monthly chart, it spiked just once above the 14-period moving average. The monthly chart is still very, very weak. And you're not going to get a fantastic move unless you get the Qs at least rallying. They don't have to lead, but they need to rally. And I'd include the SMHs right there. There's the SMH. So the SMH is the semiconductor index, trading at up $1.67 at 241.07 right now. The weekly chart has improved a lot. And the monthly chart actually is not bad. And I always like to look at it as let me just say, to clarify, the semiconductors, the chips, are commodities. They are like oil used to be and still is. From the 1900s, crude oil was the energy in more ways than one because it was the energy of the world economy. Chips from the 1970s, 80s, 90s, and then into the 2000s have taken that place. Now they haven't taken the place by replacing, but they've taken the place of being the creator, whereas oil is now just the generator of continuing patterns. Semiconductor is the growth that oil used to be in the early 1900s. So that's what we're looking at. So it's really important. So semiconductors in March, if they're able to get to they're at 241. If they're able to even touch 260 to 262, I think that would be quite impressive. That's number one. So I said there were three things. So one is I was looking at the psychology. Number two is I was looking at particular patterns. Number three is I need to see semiconductors moving well. They're doing okay now. I need to see the infrastructure area continuing to, the deep cyclicals continuing to show that there is support, because that will filter down at some point. And those are the aspects that I'm looking at. Just in pure numbers, I've just given you the numbers that you've got to look for. Certainly for the Dow, on a very near-term basis, a close below 32,400 says, be careful, be careful, be careful. All right, so I did that. Question came in. Let me just check. Where was it? Oh, the XLE. I haven't finished. I didn't do silver. So the XLE is coming off the low. I just think, look, there's the rectangle. It's at the bottom of the rectangle. It now needs to move more towards the middle from the 85s into the 87s. We'll see if that can happen over the next week or so. What did I was just about to do something and then I forgot. I was going to say a breakaway gap for a new leg up. Is that, J-Rod, are you saying this looks like a breakaway gap for a new leg up in the market? This is what I'm looking at right now. You need it. I'm not saying it is. I'm just saying this is what you need. So here you are. So I wanted to show you this on the 1 minute chart. Look at the measured move in that move at 8 o'clock on the at 7:30 on the 28th. Look at that pink move down from that peak E, and then ran up, went to a peak F, pulled back. Then I chose yesterday to do this in blue, and look what happened. Went almost to the penny, within 50 cents, I think, of the E-mini, and then you saw the fantastic rally to the upside. Then you went sideways in the rectangle formation, broke down, and now there's an attempt to try to get back at least to the breakdown level at 10 o'clock with that news at a high of 39.71, and here we are at 39.69. Now that's 39.76.50.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month, and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So silver is up 15 cents at 21.22. But if you look at that weekly chart, that's a sell mode. It needs more time. And there's your one-to-one, keeps doing these one-to-one to the downside. This is the A to B equals C to D. And all I can say is that silver led the way up after gold kind of stalled. And then gold ran high to say, hey, wait for me. Silver was stalling. Now they're both coming down. They need some time. But look at this. The dollar is trading down 44 cents at 104.54. So someone said, oh, the US dollar is turning higher, hence the sell-off. It's really that simple, says Paul. You know, there are times where things are kind of simple. You can make them as complex as you want, but they really are kind of simple. But in this particular instance, the dollar has made a peak C, and I'm anticipating that it should normally, a buy signal to a buy mode, which it is in, should see a higher high above the 105. Was that 105.36? What was the high? Above the 105.36 level. So 105.37. that doesn't necessarily mean, look, it doesn't necessarily mean that the market has to pull back at the same time, but very often we've seen that lately, that there is a relationship. But I wouldn't make it that simple. If you're looking at high-grade copper, very nice move to the upside. What's FCX doing? Ooh, gap up 2.21 at 43.19. That's very nice. SCCO, let's see what that's doing. Oh, also a gap up, very nice, at 76.6. You see, that's what I'm talking about. I don't know how you can get your copper to be moving so nicely to the upside. Look at this weekly chart. If the general market was about to collapse, and I'm saying this is a rotational aspect, both in corrections to the upside and corrections to the downside. So we've got a slight bias to the upside. We'll see what happens. If that's wrong, it's wrong. But in the meantime, stay tuned. We've got Steve Rhodes coming up for the great show with Steve and all the rest of the gang. And check out my opening call, my daily newsletter. I'll be back tomorrow.